Ladies and gentlemen, good day and welcome to the Steelcast Limited Q2FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Raunak Jain from Orient Capital. Thank you, and over to you, sir.
Good afternoon, everyone. Welcome to the Q2FY25 earnings conference call of Steelcast Limited. Today on this call, we have Mr. Chetan Tamboli, Chairman and Managing Director, Mr. Rushil Tamboli, Whole-Time Director, Mr. Subhash Sharma, Executive Director and Chief Financial Officer, and Mr. Umesh Bhatt, Company Secretary. Before we begin this call, I would like to give a short disclaimer. This call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not guarantees of future performance and involve unforeseen risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given in the investor presentation of the company, which has been uploaded on the stock exchange and the company's website as well. With this, I now hand over the call to Mr. Chetan Tamboli, sir, for his opening remarks. Over to you, sir.
Thank you. Good afternoon, everyone. As we enter the Q2 FY25 results season, we find ourselves navigating a landscape with serious disturbances to the world economy, from the Middle East crisis, Russia-Ukraine crisis, and a very disturbed geopolitical situation. Major central banks have initiated rate cuts this year and some more likely to happen in coming quarters. In the latest economic review, the global agency IMF has indicated that the battle against inflation has largely been won, with prospects of global growth showing signs of stabilization. The US economy too is likely to be projected to grow by an additional 20 basis points, reaching to 2.8%. Indian government-led infrastructure spending remains robust, reflecting positive momentum across key sectors. For ease of communication, I have rounded off most of the numbers. During our Q4 FY24 call and Q1 FY25 concall, we anticipated subdued quarters, Q1 and Q2 FY25. This has happened as we anticipated. There will be revenue degrowth on a year-over-year basis, primarily due to the liquidation of inventory in North America, Europe, and India. We remain steadfast in our optimism for a performance turnaround starting from Q3 FY25, as anticipated and communicated earlier. In Q2, we reported revenue of approximately 75.9 crores, a marginal drop of 2% compared to preceding quarter. Despite this slowdown, our discipline management and commitment to managing operating expenses allowed us to maintain good EBITDA margin of 27.8% compared to 26.8% in the preceding quarter. In spite of subdued top line, we did our best to optimize costs during these challenging times. Our EBITDA for the quarter stood at rupees 21.1 crore compared to rupees 20.8 crore in the preceding quarter. Our PAT for the quarter is rupees 13.3 crore with a PAT margin of 17.5% as compared to rupees 12.9 crore with a PAT margin of 16.7% in the preceding quarter. This reflects our continued commitment to cost optimization during these challenging periods. Our revenue mix for Q2 FY25 consists of 52.9% from exports and 47.1% from domestic sales. Despite subdued overall performance, export sales showed resilience, growing approximately 5% sequentially and an impressive 32% year-on-year compared to Q2 FY24. Domestically, the mining and construction equipment industry in India experienced a slowdown during the quarter, impacted by heavy rains. However, industry reports suggest strong growth prospects for India's MCE sector, with localization levels expected to reach 70-80% over the next 5-7 years. Given Steelcast's established presence in the sector, we anticipate substantial benefits from this localization trend alongside support from the government's sustained focus on infrastructure development. This emphasis is expected to accelerate new project awards and MCE volume faster than previously anticipated in the future. Material costs, manufacturing expenses, power, fuel, and stores and spares are higher due to increase in production in Q2 FY25 compared to Q1 FY25. Amid this challenging macro environment, we have remained focused on our strategic initiatives to cultivate new customers and expand our export markets from 15 to 18 countries over the next 2 years. We have diversified from mining focused fast to emerging sectors, including the railroad business, which we aim to grow from 3% in FY24 to 20% in the next 3 years. Our efforts in ground engagement tools are progressing well, and in the defense sector too. We successfully completed deliveries of critical components, becoming the first company in India to develop these items for the defense industry in India. Over the past 3 years, Steelcast has maintained a debt-free status, both short-term and long-term, which has allowed us to avoid financial costs amid global market slowdowns caused by inventory destocking. We've been building cash reserves in recent quarters and do not foresee the need to utilize bank credit facilities. This prudent financial management positions us well to navigate current challenges while we strengthen our foundation for future growth. I'm happy to share that our free reserves invested in bank FDs, government securities and mutual funds are at 66 crore now as of 30th September. This is likely to further increase as on 31/3/25. We are now focusing on using internal accruals to fuel our capex starting from FY26. I hope everyone would have noticed our announcement on stock exchanges for getting a very prestigious award from our very important customer. This is a great pride for our company and an accomplishment of a major milestone in the history of the company. Let me share you a few other parameters which might be helpful to investors. Capacity utilization has gone up further in Q2 compared to Q1. PBT margin is better at 23.6% to 22.7% in Q1 FY25. ROCE and ROI are more or less same in Q1 and Q2. Working capital turnover is more or less same in Q1 and Q2 FY25. Fixed assets turnover and total assets turnover are more or less same in Q1 and Q2. Current ratio is more or less same in Q1 and Q2. Debtor days improved substantially from 97 days to 63 days in Q2, thanks to our customers. With this overview, I would now like to open the floor for questions, and thank you all for your attention and continued support. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from line of Kiran B from Table 3 Capital. Please go ahead.
Hello, sir. Hi. Thanks for the opportunity. Sir, I want to just zoom out of the quarterly numbers and generally ask you a question. I know there's a lot of volatility in the US market as well, but are we seeing any strategic shift in the castings industry, either steel or aluminum, from the US and European markets to India? I mean, is it just the analyst community like us overthinking this, or is there a structural trend that is actually moving towards India from an aluminum and steel capacity from your perspective?
I'm really aware about aluminum because we make only steel castings, and what we are seeing is a definite shifting from China to India. Okay, and then whoever are the good players are in India will be benefited a lot. This is how we see it.
Got it, sir. And this is primarily obviously what we are saying is China used to supply to the US market, if I get the clarification right. China used to supply a lot of stuff to some of our clients in the US market. And those clients are essentially saying, hey, India, why don't you pick it up? Hey, Steelcast, why don't you pick it up? Because we are also very good.
That shift is happening.
Okay. So this is, is this like structural, sir, or is this because China's, based on previous concalls, China's cost structure has changed and therefore they are slightly more expensive than ours in the steel cast?
I mean, there are several factors which is leading to this structural shift. One is geopolitics, one is the cost structure, one is over-dependence on China. So there are a combination of reasons. So we have seen this shift very, very clearly.
Got it.
Thank you.
So just last question from my side.
Sir, in terms of we are at whatever 410 crore from a revenue perspective. Given the strategic shift, fundamental shift, when do you think, I mean, in your estimate at this point in time, I know it's difficult to call, but just in your estimate, when do you think we can potentially reach 1,000 crore revenue?
The present facilities and capacity what we have will get us to about 800. Okay?
Got it.
And if we do a capex as we are planning, which will start somewhere in 26, then that should be another minimum of 400 crores. So both put together, if we do that capex, so then the volume will be about 1,200 crores, and that might happen in maybe, it's a wild guess, but maybe 29-30.
29-30. Got it, sir. Got it. Thank you so much, and join back in the queue.
Thank you.
Thank you. Participants who wish to ask a question, may please press star and 1 at this time. Our next question is from the line of Harshal Solanki from Equity Capital. Please go ahead.
Hi team. Good evening. Sir, I have multiple questions. First is, we are saying that Q3 onwards there will be a turnaround. So can you throw some light on the order book or the production schedules that you have in hand from the customer which is giving you this confidence?
I'll request Mr. Umesh Bhatt, our company secretary, to give those numbers. You will just wait for a while. Can you ask you another question?
Yeah. So the American Railroad supplies were expected to ramp up from Q3, and we are already in November. So if you can throw some light.
Harshal, can you please switch to handset mode? Your voice is having an echo.
Hello?
Yes, sir, please go ahead.
Is it better?
Yes, it's better now.
Yeah. So the American Railroad supplies were expected to ramp up in November by Q3. So can you throw some light on where are we now?
There is a slight delay as of now, as we speak. So hopefully we might have to wait for another 3 or 4 months. But what was to start from October onwards has not started. It should start maybe it will take another 3 to 4 months.
Okay. So what is the delay exactly about? Is it something from our end or the customer side? If I can ask.
See, there are group of components which we have already developed. Out of 5, 1 component we are getting lower life. So we are doing some more trials. So that is the delay.
Okay. Got it. And hello?
Hello?
Yes, please.
Yeah, Mr. Solanki, the firm purchase order we are having right now is around 100 crores.
Okay, and this has to be executed over what period?
The current quarter.
Current quarter. Okay. And my next question, thank you for this. My next question is on the defense part. In the opening comments, you mentioned that you have successfully delivered 1 component for the defense. So can you throw some light, without naming, of course, the product you can't specify, but can you throw some more light on what is it exactly and how much opportunity is this for us?
Due to confidentiality reasons, I'm not in a position to say this. If you ever visit our facilities, we can show you those products. But I would not be able to give you a total picture on this concall. So very sorry for this.
No issues. And anything on the tank CACs which we had developed? We had supplied 5 CACs. But any follow-up order?
All that has been done. We are now waiting for bulk orders.
When can we expect that? Because that has been delayed since a long time. We haven't got any new orders as such.
The only thing is, this is we are working with Government of India, so very difficult to predict.
Okay. And one question is on the aerospace thing. In the annual report, we have said we have the certification from a German agency for aerospace. So are we looking to develop any new product in this space? Or how do we plan to leverage the certification that we have?
This certificate, shows our capabilities and the facilities what we have. So wherever we go, we show this, and then we move forward.
Okay, but no specific plans to get into aerospace as well?
No specific. We continue working with Government of India, defense industry. As of now, there are no plans to do any exports also. And only thing is, with government, you to wait. We don't know.
Okay, understood. And last question would be, what would be the volume for this quarter, tonnage?
Sorry?
What would be the production volume in tonnage terms for this quarter?
Umesh bhai, you have any idea?
Yes. It is 2,900 tons.
2,900 tons. So, sir, roughly if we see, it would amount to 5,000 tons in H1. So are we on track to do 15,300 tons, which we had guided in the September 23 PPT, or is there any need for revision?
No, there will be, it will be a slightly lower number than what we had shown in that September 23.
Okay. By how much percent, any idea? Hello?
Umesh bhai, can you just give that number if you have, or if you don't have, it's all right. Hello?
Hello?
Yes, sir. Sir, it is about 12 to 15%.
Okay. Thank you.
Okay, got it. Yeah, this was it. Thank you so much.
Thank you. Our next question is from line of Krishna from Electrum PMS. Please go ahead.
Hi, sir. Thank you for the opportunity. My first question was, what kind do we plan to enter aluminum casting as a business, as a strategy? Or we are comfortable in the steel segment that we are in right now?
We are very comfortable in what we are doing, which is steel casting, and we have no plans to get into this aluminum.
Okay. So considering the industry dynamics, what kind of top line growth and EBITDA margins we are seeing in the next 3 years?
As we always said, in all concalls, that we aim for 22% EBITDA, and that's what we want to do all the time, but end up having bit more. So the planned EBITDA will be always 22 plus. Okay.
Right. And the top line growth, considering industry dynamics in the next 3 years, what kind of growth can we see?
From this year to next year, we should surely be 25% better, and maybe another 25% better from in 26, 27.
So 20% in FY27. Is that what you're saying?
Yeah. There is a possibility.
Okay, sir.
Thank you.
Thank you.
Thank you. Before we take our next question, I would like to remind participants that you may press star and 1 to ask a question. Our next question is from line of Sahil Rohit Sangvi from Monarch Networth Capital. Please go ahead.
Yeah, good evening, sir, and also congratulations for maintaining the margin. My first question is, the 2,900 volume number that you've given, is that the production number or the sales volume?
It is production number, sir.
Would you be able to give the sales number, sales volume?
That might be around 3,000 tons, maybe.
And what would be the same number for Q2FY25, the previous quarter?
Previous quarter, corresponding quarter of previous year you are talking?
No. Same year, Q2FY25.
So you want production?
No, sales volume.
2,600 tons in Q1, 32 tons in Q2.
Yes.
2,600 tons in Q1 and 3,000 in Q2, right?
No, 2,532 tons in Q2.
Okay. So this makes sense because then the realizations are largely maintained. Otherwise, I was getting a wrong number on the realization front. So the pricing trend is largely maintained. I mean, is there a pressure due to the decline in the steel prices? Any kind of pressure on that?
No, we have, as most of you already know, we have a set pre-decided formula on input prices. If the input prices go down, the sales price goes down. If the input prices goes up, automatically with a lag of 1 quarter, we get price increase. So all this pressure on steel prices, input costs are down, so we'll pass on some reduction to them.
Correct, sir. And sir, is it fair to say now that the destocking which is happening largely on the customer front, you are seeing that getting down now? Is it over now? Are you getting?
It's already over, and that's why in my initial talk, that is why we are seeing uptrend from Q3 onwards. That is precisely the reason.
Got it. And what would be the revenue contribution from American Railroads this quarter? Sorry, I joined a little late. There was a lot of calls going on.
There is a delay in volume picking up for railroad, maybe by 1 or 2 quarters,
Okay. But next year we should have revenue.
Yes, absolutely.
And next year would be what, 4-5% or lower than that of the revenue?
If everything goes well, no, we should do around 7.5% next year.
Okay. Thanks, sir. Thanks. That's all from my side. Thanks, and all the best.
Thank you. A reminder to the participants that you may press star and 1 to ask a question. Our next question is from line of Ashwini Agarwal from Demeter Advisors LLP. Please go ahead.
Good afternoon, Chetan Bhai. Congratulations on maintaining margins in a very tough operating environment.
Yeah, thank you.
So a couple of questions, sir. One is, this US Railroad, you're saying that one of the 5 components that you're supposed to supply has a lower than expected life. So do you have a root cause in sight and how you are going to fix that? Because without that root cause, visibility will still be limited, right?
So that's what I said, that we are working on it. We have not yet been able to identify the root cause. So we're trying to diagnose this, and we should be able to come up with an answer maybe in coming 3 to 4 weeks.
Okay. And sir, any update on the ground engaging tools conversation that you've been having with one of your large existing customers?
It is the business is trickling in a very small way, but we were trying to work out a very large volume with 2 of our large buyers. But the discussions are on. We're not able to conclude anything so far.
Okay. And the new capex that you were speaking about for fiscal 26, this is the new site for roughly about 5,000 tons odd. Am I right on that?
Yes, this will be a new site, some 10 kilometers from our present site. We may do anywhere from 5,000 to 10,000 tons, depending upon time. We'll take this decision in 2026.
Okay. And what would be the order of capex, sir, total?
If we do about 10,000 tons, the number should be about 80 crores.
Okay. All right. And sir, when you said that you have firm purchase orders for 100 crores for the current quarter, so I mean, and do you have any visibility for the Jan to March quarter in your order book, or these are all short cycle orders only?
That answer was the firm orders in hand. But the general practice is people give 2 to 3 months orders, and then they give us visibility for the coming forward 12 months.
Okay. Okay. So last question from my side, and this is a margin conundrum, right? You always say that, our design margins are 22%, but you do much better than that. Even in such a difficult quarter like September, you delivered over 25% EBITDA margin. So what causes the margin to come out at 3 to 7, 8% higher than what your design margins are?
See, one is the factors are common, about 4 or 5 factors, okay, which they keep shifting between quarter to quarter, and we've been lucky enough to get this. Like this quarter, there were benefits on exchange rate and input prices.
Mm-hmm.
And obviously, reasonably good internal cost controls also.
Mm-hmm.
So every quarter, we keep fluctuating within 4, 5, 6 different types of reasons for this.
So Chetan bhai, would it be fair on my part to say, okay, forget about what happened in the next few quarters or next year, but let's say 2, 3 years from now, when you are probably, in the shooting distance of 900 to 1,000 crores in revenue, at that point, I mean, would it be reasonable for us to expect that as your revenue grows, you will definitely have more operating leverage available to you and your margins should be somewhere in the ballpark of 28 to 30%, or is that too aggressive?
No, I think it'll be too aggressive. I think on a long-term sustainable number should be around 25.
Okay. All right. Thank you, sir. All the best.
Thank you.
Thank you. Our next question is from line of Darshit Haveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Firstly, congratulations on a great set of results. Very commendable, sir, that you've been able to maintain margins, sir. So just wanted to ask a bit in terms of revenue visibility. Like I think we said we have 100 crores orders that we're going to execute in Q3. So what kind of revenue can we see for Q3, Q4? Could we end the year at 120 crores revenue?
See, the SEBI restricts us to give exact numbers and all, but we can say 20-25% better sales than Q2, and maybe another 20-25% better in Q4 compared to Q3. Okay.
So just want to clarify, sir, Q3 will be better than Q2 by 20%, and Q4 will be better.
I think I said 20-25, and again, yeah.
Oh, okay, fair enough. So and just earlier, I think you said in FY26 we could have around was it correct 30-35% growth in FY26?
I didn't say that.
So okay. So what kind of top line could we see?
No, you're only asking us for the coming 2 quarters, right?
That I asked, sir, that you clarified, sir, and I think previous question you had answered to someone for the 3-year vision. So just wanted to clarify what.
As of now, as we speak, we should do 20-25% better in next financial year also.
Okay. Fair enough, sir. Yeah. And sir, just wanted to know my last question, sir. That capex by what time will we come up with, and what is the capacity utilization currently?
Currently, we are at about 45%. We are likely to go up to about 90 in FY26-27. So we'll decide about capex in 26.
Okay. Fair enough, sir. Yeah, that's it from me. Thank you.
Thank you. A reminder to the participants that you may press star and 1 to ask a question. Our next question is from line of Kiran B from Table Tree Capital. Please go ahead.
Thank you. Sir, just one question from my side. Sir, what gives us this confidence of 25%, 30% growth, or whatever that number is, right? 20, 25, 30% for the next 2-3 years. I mean, the railroad order is only one order which can add to our revenues, but to go we are at a fairly high base. So let's say we end this year with about 350-400 crore revenue. From there, 25 is 500, and from there, 25 is 650. So there's a jump of 100 crore, 150 crore from here on for that kind of growth to come through. I don't know if railroad business is going to give that kind of revenue year on year. So if you could just explain what gives us that confidence of adding that extra 100, 150 crore every year for the next 2 years at least, wherever you have visibility.
See, we are in constant new parts development. Those are continuously going on. Second reason is the markets which are subdued now may also revive, over the next 6 to 24 months. So even if there is no railroad business, we should be still able to have growth in 25, 26 and 26, 27.
Got it. So this is basically inventory restocking, even aside from the railroad business, we are saying inventory restock
Yes.
from all the markets.
Restock, revival of demand, many factors, plus new parts which are, we are consistently developing new parts. So we will always have some additional sales.
Got it.
Thank you.
Thank you, sir.
Thank you. Participants who wish to ask a question, press star and 1 at this time. Our next question is from line of Harshad Solanki from Equity Capital. Please go ahead.
Hi, sir. Thank you for the follow-up. I have 2 questions. One is, recently your largest customer announced that they are investing some 500 crores to increase the plant in South India. So are we seeing some initial inquiries from them as to ramping up the volumes or anything on that plan?
They have already told us to be prepared for better volumes in about 2 years' time. And plus, we have a lot of inquiries on different parts which they will need in new facility. So all that work is in progress.
Okay, but that is like a 2-year away thing for us and not something in the near term.
Yeah, minimum 2 years away.
Okay, understood. And one bookkeeping question on the financials. So our other financial assets have increased by 13 crores. So what is it exactly about, if you can highlight?
Mr. Sharma, can you respond, please?
Right, sir.
Hello?
Sharmaji, please respond.
Should I repeat?
Mr. Solanki, this is other financial assets means this is 72 crore means we are talking about?
No, if you take from March to September, there is a 13 crore increase in the other financial asset line item. So if you can help us with what is it exactly on account of?
So this is other financial assets, March 24, 42 lakhs, and then that 81 lakhs that you are talking about?
I don't have the results exactly right now, but no issues. We can take this offline also. No issues.
Okay, fine.
Yeah. This was it. Thanks a lot for answering.
Thank you. Participants who wish to ask a question may press star and 1 at this time. Our next question is from line of Arnab Sachdev from Cruise Investment. Please go ahead.
Hi, sir. Just a couple of questions. So you mentioned export degrowth is expected to reverse from Q3 FY25. So can you elaborate on this a little bit?
Please repeat your question.
You mentioned export is going to degrowth. It's expected to reverse from Q3 FY25. Can you elaborate on this?
No, I said for the whole year there will be a degrowth. Nothing to do with exports having degrowth.
Okay. And what are the other key milestones that you have planned, for H2 FY25 to, maintain this pace that we're going at? Any other, key milestones?
We don't have any other key milestones to work for, but we want to do 20-25% more in the third quarter and again 20-25% more in the fourth quarter. This is what we want to do for sure. And next year too, we want to achieve about 25% growth. So all the work and efforts are going in this direction.
Okay. And just one last question. So any other strategies that we are going to use to maintain or maybe grow the domestic growth? Our business in India.
At the macro level, we want to have 50% exports and 50% domestic market. So which we will continue, which may keep fluctuating 5 to 10% here or there. But by and large, we want to keep this mix.
Okay. All right. Thank you.
Yeah. Thank you.
Thank you. Our next question is from the line of Rishabh from RBSA Investment Managers. Please go ahead.
Yeah, so we have mentioned in the previous concall about the industry size of being 5 lakh metric tons, including the railroads. So I just want to understand overall how has been the growth overall in the industry last 3 to 5 years? Has it been flattish or there has been some growth?
I think the industry is growing moderately with 5 or 6% annual growth over the last 3-4 years.
And so we mentioned about these ground engaging tools. So is this market size of this is included in this 5 lakh metric tons or this expands the market?
No, that's another separate market. So we are working on it. We are talking to our 2 large customers. We want to get into this line. So once we have something firm, we will probably might put up a separate facility also.
Okay. And how are the conversations, sir? Can we know by the next 6 months to 1 year? How advanced stages are the discussions going on?
We should know something maybe after March, maybe.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, that was our last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining this call. We appreciate your participation. If you have any questions or queries, please feel free to reach out to us directly or through Orient Capital. We look forward to connecting with you again next quarter. Thank you.
Thank you. On behalf of Steelcast Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines.